apparently some analysts are saying that July is going to be a really strong month for stocks in general.
Of research at Fundstrat, Chief Investment Officer of Fundstrat Capital, as well as a CNBC contributor. You weren't really impressed with June that much in terms of the averages kind of stalling out, and you expect July to be better as valuations are more reasonable and sentiment is not crazy bullish. Does that sum things up?
Yeah. I mean, July we're going to get Q2 earnings.
Right.
And in the first quarter, earnings came in way better than expected. And so the market's PE is actually lower now than it was in January by 1 point, 1 full turn. And I think second quarter earnings are going to surprise to the upside again. So the market's going to get cheaper again. And that means there's room for PE to expand. So I think July is going to be a stronger month for stocks.
8,000 is doable this year.
Yes.
On the S&P.
Yeah. And because 8,000 would be roughly 20 times 2027 earnings of 400. I think that's a low estimate. I think the PE multiple could be 22 or better. So that would be, even 84, 800 kind of would be the upside into year end. But I do think between now and year end, there should be, something that might feel like a bear market too. Not in July, but maybe, So
he's saying July could be good, but he's also worried about the rest of the year. The PE ratios are a little bit lower right now, so there may be more bargains.
Between August and October.
Why not in July?
Well, I think for the things Joe cited that, June wasn't a great month. And I think there are a lot of fund managers trailing the benchmark this year. Only 23% of fund managers are beating the large cap growth index. That's the lowest number in almost 5 years. So I think there's going to be a lot of dip buying this month.
What do you mean it feels like a bear market? Does it go down 20%?
It might.
And what average? Are we talking about the NASDAQ or the S&P?
I think both. This year, the February to April decline felt like a bear market, and that was only 7%. But I think,
It did feel like a little bit of a slowdown, but I feel like we've been doing pretty well so far. It's kind of surprising what he's saying, that a lot of hedge funds are doing pretty poorly compared to indexes right now. A lot of the AI stocks are still doing really well. Nvidia has slowed down recently, but many of the AI infrastructure stocks are still doing pretty well, like Vertiv for data centers and things like that. Micron's still been really strong. And if you're worried about the tech bubble, if you're worried about the AI bubble, we've still found some really solid stocks like Eli Lilly, Altria, and a few others that have been pretty good for just diversifying away from tech a little bit, but still getting really strong returns over the past 3 months.
And later this year, we have a few things that will test the market. One is the market is going to test the new Fed because he is a new framework and a new way to look at inflation. And we know that there's going to be
the interest rates are going to be really interesting to see what the new Fed is going to do. Are we going to see cuts? Are we going to see more of the same? A lot of people do not feel super confident about the economy right now, unfortunately. And obviously, the job market, I think, is a lot worse than the unemployment numbers are showing us. So that's another concern as well. That being said, growth is not necessarily tied to just mass hiring anymore with the advancement of AI. The question is whether AI can keep advancing to new heights as rapidly as it has been, or is the LLM model about to hit kind of a wall of progress? With the amount of money these companies are spending on AI infrastructure, they better hope there's not much of a wall of progress, though. Otherwise, they may not see the profits they need to continue these massive rises in their stock.
a gradual unlock of the SpaceX shares, and that's a headwind. And I do think, there is going to be a cumulative shortage of petroleum products, so that's a headwind. And I think margin debt's kind of high. So I think four things that could unravel in a way that might feel like a bear market.